It's February 15th, 2026. And I have to say, looking at the analysis this week from Concurrence and Schwab,
Yeah.
I'm getting some serious whiplash.
Total whiplash, yeah.
For 2 years, it was so simple. A company says AI, and you buy the stock.
You just buy, but now that's completely flipped on its head.
It's totally reversed. So what are we seeing here? What's the street calling this phenomenon?
They're calling it the AI displacement trade. And it's a huge shift. We've gone from AI as a miracle to who is AI going to replace?
Right, the displacement trade. I saw that in the Market Minute report. It sounds like investors are actively hunting for the next company to become obsolete.
That's exactly what it is.
But the targets really surprised me. I was thinking call centers, maybe, but C.H. Robinson, a massive freight logistics company.
Yeah, that's a giant.
Down nearly 15% in 2 days. But what happened there?
Well, this is where you really have to look under the hood. It's all about AI tools like SemiCab. You see, a human broker at C.H. Robinson, they'd get on the phone, match a truck with a load. It was, manual, inefficient.
Sure, but we've had digital load boards for years now. What makes this so different?
It's not just a board. The AI in something like SemiCab, it predicts network flows. It's designed to kill those empty miles when a truck is driving without cargo. A human just can't do that math in real time for an entire national fleet. The AI can. And if it's more efficient, it's cheaper.
And the human broker's margin just vanishes.
Evaporates. That 15% drop, that's the market waking up to the idea that C.H. Robinson's entire business model might just be mathematically outdated.
Wow. So it's a pure margin killer. And it's not just logistics, is it? The sources point to panic and, wealth management and insurance, too?
Oh, yeah. The blast radius is definitely widening. You see tools like Altruist for tax planning or Insurify for insurance.
Insurify, so it's a comparison site.
It's more than that. It uses generative AI to compare the really complex policy details, the stuff you used to need an agent to walk you through.
Right. So if you're a legacy firm and your whole value prop is that agent, that human gatekeeper of information.
Your value proposition just collapsed.
Yeah.
And investors are seeing that and acting fast. It's a sell first, ask questions later kind of mood.
Okay, but here's the piece I'm struggling with. If AI is working so well that it's replacing whole industries, why did the AI builders take a hit? Market Minute called it the Thursday tech tantrum. Cisco is down over 12%. Even NVIDIA slipped.
That is the paradox of this moment, isn't it?
Yeah. If AI is taking over, shouldn't they be soaring?
Well, think about it this way. The displacement trade suggests that technology is finally mature enough to, do the job.
Right.
But if it's mature, maybe that frantic build phase is slowing down.
So Cisco's warning about a slowdown in infrastructure spending was the big signal.
Exactly. Companies bought the hardware. Now they're in let's call it a digestion phase. They're deploying the software to cut their costs.
Which is great for them, but bad for Cisco's short-term sales. And even worse for the legacy companies getting disrupted.
Precisely.
Man, that sounds like a recipe for a market crash. Tech is down, legacy firms are down, but the Dow held 50,000.
It did.
So who is holding things up?
The macro picture saved the day. Friday's CPI report, it came in cooler than expected.
The inflation data.
The inflation data, it was 2.4% below the forecast, and that triggered a massive rotation. Money didn't leave the market, it just ran for cover.
It fled tech and went into safety. You mean the boring stuff?
Boring is beautiful right now. JP Morgan was up, Procter & Gamble was up.
Oh, yeah?
We're seeing this two-tier market emerge. You've got high-growth tech battling these new displacement fears, and then you have this industrial and financial base being propped up by hopes of a Fed rate cut in June.
So for anyone listening trying to make sense of this, is the AI bubble finally popping?
I wouldn't say it's popping, I think.
Yeah.
I'd call it maturing. The easy money era is over.
Yeah.
The market is getting really discerning now. It's separating the companies that use AI to get super efficient from the companies that are the inefficiency that AI is designed to remove.
That's a pretty harsh filter.
It is.
But if Wall Street is really betting against entire industries, freight brokers, tax planners, it suggests they believe the disruption is finally real. It's not just hype anymore.
And that Dow 50,000 number becomes the thing to watch. If the market can stay at these record highs while entire white-collar sectors are getting hammered.
It means the economy can grow, even if the workforce, or at least the traditional workforce, starts to shrink.
It's a sobering thought.
A very sobering thought to end on. We'll be keeping a close eye on that 50,000 level. Thanks for listening.